Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 241, Mortgages with Brooks Kelly. Brooks, thank you for joining me on the show.
Yeah, thanks, Jake. I appreciate you having me.
Absolutely. And Cory, thank you for joining me back as always. And thank you, Cory, for holding down the fort last week. I was on a golf trip down in Tulsa, and I know you and Jake Cross had a great episode so far. Our viewers haven't checked out episode 240. It was a really good one about taxes. Fun stuff there, Cory.
Really fun stuff, I know. Just what everybody wants to think about this time of year.
And Brooks, you're joining us from Dallas, Texas. So Brooks, how's the weather down in Dallas today?
Well, it was 95 yesterday. I think it's about 70 today. So it's normal Dallas, very bipolar here.
Yeah, the up and down temperatures of Texas. I grew up in West Texas, so I know that things can change pretty violently down there. And, I think they say the same thing now in Missouri and Kansas, which is pretty funny. I think that's just the world we're living in.
Crazy thunderstorm this morning. So
well, hopefully everybody's okay down there. Yeah, I think some of that blew through Kansas City as well. Thank you again for joining us, and thank you to all of our listeners and our audience. Our subscriber count continues to grow. So if you're watching this on YouTube, we highly encourage you to go ahead and hit that subscribe button. If you think the show's any good, a thumbs up would also be appreciated. And if you're listening to this on Spotify or Apple iTunes, a 5-star rating is also much appreciated. So thank you again, Brooks, for joining us. Today, we want to talk about the state of the mortgage department, or mortgage rates, and everything going on. But first, I want to introduce you a little bit because many of our audience probably hasn't met you yet. And I want to just maybe, before we dive into the mortgage market, why don't you just share with our audience a little bit about where you're from and what brought you into the mortgage world?
Yeah, so going way back, born and raised in Arizona, got a golf scholarship to Texas Tech, didn't know where Lubbock was on a map. Ended up there after college, tried the pro golf thing for about 5 minutes, and that didn't work out. So I thought I wanted to be in the development business. So I started working for Lennar Homes as a construction guy and then a salesperson, and realized that there was a much bigger market out there than just being stuck in a model home. So I started to explore the mortgage business in 2007. Probably the worst time ever to get into the mortgage industry, but I made it through it, and on the other side, it's been a great career. I love helping families get into homes. Would love working with first-time home buyers and getting their family, in a place they need to be to build wealth, and that's very important to me. So,
yeah, it's awesome. And you're also married with some kiddos, right?
I am, yeah, married 17 years now. I got a 13-year-old boy named Royal, and Cruz 7 years old. So, yeah, lots of fun at home.
Nice. Your son's name is Royal? That's awesome.
Yeah, named after his great-grandfather. So
not the Kansas City Royals?
No, not quite.
Okay,
maybe way
enough.
back in the day, but
Awesome. And yes, you're located in Dallas, but what we found, and at Falcon Wealth Advisors, we actually have clients in 30 states. So can you talk a little bit about the breadth of your business? I know you work with clients all over the country, so you can talk a little bit about your company and where you work with people?
Yeah, I'm partner in the Mortgage Link. It's a nationwide mortgage company. We're licensed in 22 states right now. I'm personally licensed in, I think, 12 of them across the country, mostly through the South, Kansas and Texas, Oklahoma, all the way through Florida and Colorado. So we help families with their primary residence, their secondary homes, mountain houses, beach homes, and investment properties as well. So if there's a product for a home, we've got it.
Nice. So are you in Missouri too? Do you guys have a presence in Missouri?
Personally licensed there. We are working on a branch in Missouri so that we can have a branch license there as well. So Missouri has some strict brick and mortar laws there. So we will be licensed in Missouri very shortly.
Awesome. Awesome. And so now with, the adoption of Zoom and phone calls, so you could help a client of ours in Kansas and Missouri, I'm assuming, or Texas or Florida, obviously.
Absolutely. Most of my business is done through Zoom. I mean, we love our clients to come into the office, but COVID changed that dramatically. And most of my client consultations are done just like this.
Got it. Got it. So before we dive into it, I know Cory's going to kick off with the first official question we have for you, but I'm curious also because a lot of our clients will typically say, I'll just go to my bank to get a mortgage versus a full-on mortgage company. So could you explain the difference? Maybe I know Mortgage Link of how you guys are different than me just going to my local bank for a mortgage.
Yeah. Well, I mean, every time I go into my local bank, I leave and I'm like, man, that service was awesome, right? Has that ever happened to you guys? Especially now you go in and it's like automated tellers and, transactions literally through Zoom at the bank branch. But no, mortgage bankers like us were created for service, and the banks just can't live up to that same service that we have. So we do one product only. It's residential mortgages. We don't do car loans, credit cards, student loans, anything like that. Bank deposits, are not important to us. Our number one edict is to communicate with you, provide excellent service, and close on time. Banks just don't have that expertise or knowledge to make that happen, or the care really. So we're licensed, trained originators, just like you guys are in a financial planner. It's the same for us. When you go to a bank, you get someone that's just registered and trained by the bank, and it's just not the same experience. They don't have the same breadth of products that we have either. They have what that bank offers, and that may not be what fits this particular buyer the best. But when you're in a competitive market like we have been for the last 4 or 5 years, when you go in to make an offer on a home and you're not with the local lender, your offer goes to the back of the pile because those agents know that the banks don't close on time, that they don't properly pre-qual clients, and that they're just not going to have the same experience of having someone that's live, local, and very knowledgeable like we are.
Yeah, that makes good sense. And that's similar, Cory, to us at Falcon Wealth Advisors. That's one of the reasons we don't try to do accounting work or legal work, right? We don't create trusts and we don't file taxes because we want to stay in our lane. We want to do financial planning and investments. Now, Brooks, because you're not at a bank, does that mean you can shop rates amongst different banks? Or how does that work?
Yeah, I mean, mortgages are essentially a commodity, right? They come out at generally the same price from the investors, but we have 35 different investors that we price through. So we're not tied to the bank's appetite at current market. Certain banks will move their rates up and down. And so by us having 35 different options, we get to go with the one that has the best offer that day. So, and they come in and out of the market. They come in and out of different products, different loan amounts, all kinds of different parameters for a loan. And so by having all these different ones to compare to, we get the best price on that day without you having to go out there and explore and get your credit pulled all over the place. We're taking care of that for you. Then we process, underwrite, close, and fund that loan in-house. And then it's sold to that bank to service, a week or so after closing. So you don't have to worry about all the other, shopping your loan around. We take care of that for you and provide the service to go with it.
Nice. Awesome. Perfect. Yeah. Well, Cory, why don't you kick us off into our official questions? Thank you, Brooks.
Yeah, very good, Brooks. Thank you for that explanation. That was very helpful to understand, and I'm sure it's helpful for the audience of the show here too. But just to get us kicked off, the question I wanted to ask was, with mortgage rates being more than double where they were a year ago, what are you seeing in the lines of mortgage applications?
We saw them fall dramatically probably in October, November of last year. We still had a decent amount of people in the market because it created an opportunity for those that could not buy a home last spring. There was a lot of people that had 3, 5, 10% down that just got outbid week after week after week, and they were putting in offers and they just got exhausted by it. So it created an opportunity for buyers that are VA, zero down, FHA that needed some closing costs. So it opened the market up a little bit. And so it slowed it in the October, November timeframe. But as folks realized that this was their opportunity, it literally the day after Christmas, normally that week between Christmas and New Year's is we're just kind of cleaning up and getting ready and planning for next year. And our phone did not stop ringing. And it started like that the week after Christmas all the way through January. So loan applications did dip a little bit in February with rates going up, but everybody seems to have gotten used to it. And those that can afford the payment are back in the market shopping again. So we're seeing pretty good activity right now.
And isn't the issue that there's still supply, like there's supply issues, right? So it's not like there's thousands of houses available and rates are high. It's like, no, rates are higher, but there's still limited quantity. Do you see that same issue in Dallas? Like that's in Kansas City, that's what we see a lot of, but I don't know how it is in Dallas.
Big time. Yeah, Dallas is the mecca for people moving, Florida, Texas, some into Arizona. Tennessee seems to be a hotbed for people moving out of the north. And yeah, we have about 1.5 months worth of inventory. In a healthy market has about 4 to 5, which we haven't seen that in 5 or 6 years at least. It got to an absolute low last April. It increased a bit to about 2 months of inventory, and then it's come back down again. So it is springtime. We're hoping for more inventory on the market. The prices are going up again. I think we're 2% higher than we were at this time last year, which we did see a decline in the fall, but it's put, people need shelter. They need a place to live, and they want to buy a house, and we still can continue to see that demand. So,
yeah. So let's lead into the next question is, and again, full disclosure here, we're not going to consider any of this episode advice. So if you're watching or listening to this, we don't want you to go necessarily take action on what we're saying. We don't want you to talk to a mortgage broker, representative, or certainly a financial advisor. But Brooks, what are some tips for that first-time home buyer, that millennial that's tired of living in their parents' basement, or they're tired of renting, and they're like, okay, I finally have saved up enough for somewhat of a down payment. What are you seeing there in activity, and what are some tips that you can give the first-time home buyer right now?
Yeah, I mean, the millennial is, 30 years old now for the most part. So they're established in their job. They've got, good income. Most of them have a bit saved up for this because they have conserved by possibly living at home or with roommates. But you really don't need that much money to put down on a house. I mean, you can get a conventional loan with 3% down. So there's no reason for you to wait to get that 10 or 20% down, because the market's going to continue to go. Like we said, there's a shortage in housing, so there's demand. And the return on investment from a leveraged asset like real estate is significant. By putting 3% down on a $350,000 home, that 3%'s growing with the $300,000 asset. So don't wait, because all those people that waited in 2018 really wish they would have bought in 2018 now. So the house is probably close to doubled at this point.
Good point. Yeah. So yeah, that's a good answer. Like, you certainly don't want to wait. I mean, obviously we'd love for people to avoid PMI, by putting that 20% down. But if you're just trying to get into a home, I think that's not a bad idea. Certainly if you've got enough for that 3% down payment, as long as you're buying a house.
Yeah, PMI is, I believe it's a necessary, and it's a great thing, really, because it takes the average person 7 years to save 20% down on a house. And the appreciation that you lose in that period of time is way more than any sort of PMI that you're going to pay. But PMI's got very competitive over the last 10 years or so. It was pretty expensive coming out of, the crash of 2008. But it's gotten very competitive with 6 or 7 different offerings out there. And they literally compete on every deal to get the best PMI rate. And I mean, I've seen some with, a $300,000 home with a good credit score, like 740, probably $100, $140 a month in PMI, which that's going to go away over time. And FHA just lowered their PMI to, almost, 40% or so. Which has made FHA a lot more attractive to buyers too. And those rates have come down a little bit more than the conventional ones have.
That's good. Cory, didn't you have a personal experience with your PMI? Didn't you have a good scenario? Would you mind sharing?
Yeah, so I did just what we're talking about. And as a millennial, I can speak to this. I wasn't living in my parents' basement, but my wife and I were moving from our apartment. But when we bought our house in 2020, in May or June of 2020, shortly after the pandemic began, actually, we put 7 or 8% down, and about a year later, we were able to go through the process, Brooks, of doing a broker price opinion because the home value had appreciated, and within a year, the PMI was actually canceled because the 8% that we put down became 20% equity in the home, given what home prices did.
Yeah, we see that a lot. I mean, typically, like if you look at the schedule, it's supposed to be there for 8 to 11 years, but once you get to that 20%, you can always do that opinion with the servicer, and they can always get rid of it. So yeah, I would urge any homeowner on here that bought a house in the last couple of years and have a conventional loan to contact your servicer and see if that's something that's available.
Good. Cory, what's our next question?
Yeah, so we just talked about the first-time home buyer, Brooks. What advice or tips would you give to the growing family, perhaps somebody who's looking to upgrade or move into a larger home?
Yeah, we've had a lot of these conversations lately with people that are, they bought a home or they refinanced it in the last couple of years and they have that 3% rate, but they're just not in the house or the area or the school that they want to be in. And while it does make a lot of sense for them to keep that home and keep that low rate, it just doesn't fit their lifestyle. So you got to measure it and see and look at the payments and see what it's going to take, because they've also gained a lot of equity that they can roll over into the new house. But ultimately, owning a primary residence is about owning a home for your family, right? And where you want to be and where you want to live. So don't let that hold you back whatsoever on the interest rate. You're always going to have the chance to refinance it. The market will cycle, rates will come back down. So make sure that you're comfortable in that payment by moving. And then if that's okay, then pull the trigger. We've also seen a lot of folks keep that house too, access the equity from it, leave that 3% rate where it is, and take a home equity loan and use that money to purchase the next one and rent that house out, so that now they're growing 2 real estate assets as well.
Yeah, that's good. And when you argue, Brooks, that the price that you pay or sell, that you buy or sell a house for is far more important than the mortgage interest rate, right? Because like you mentioned, you can typically refinance it. Now, again, we don't know when rates are going to go back down or if, but isn't that more important, the price?
Yeah, oh yeah. I mean, it's always buy right, but there's not a lot of opportunity to get a deal these days. So, like I always talk to the clients and like, look, if this is what you want, you can afford it. This is what it looks like. I have a client right now going through that exact process where, their payment's going to go up by about 50% of what they have, but they're not in the elementary school that they want their family to be in. So it's more about lifestyle than anything, and then making sure that it fits into their budget.
Got it. Good. What about the baby boomer or the person preparing for retirement and they're ready to downsize? So we've talked about the first-time home buyer. We've talked about someone looking to upgrade or get into the right school district. What about the people that want to, they're in a 5,000 square foot home and they want to go to a 3,000? What tips do you have for them?
Well, the equity has never been as good as it is today. So, if they're in that big home and they can, essentially cash out of it and buy another house with a very minimal or no mortgage payment whatsoever, it's an excellent time to capitalize on the valuations that we're seeing today, especially, in the spring market, the shortage of inventory. It's a great time to take advantage of that. There are reverse mortgages out in the market still. Reverse mortgage is a great product for anyone over 62 to look at. It eliminates their mortgage payment. They pay their taxes and insurance, and then the interest just accrues on the mortgage balance over time. So it's an alternative to, into retirement where your cash flow is less, but you still want to be in a home and not necessarily, hole up into assisted living or, an apartment kind of situation.
No, that's good. That's good. So yeah, I think reverse mortgages have become far better than when they were initially rolled out. So are you suggesting that some people then are staying in their home and then just tapping their equity to live off of or getting an income stream? And is that what you're suggesting?
Yeah, there's lots of different options with a reverse mortgage. I'm not a reverse mortgage specialist by any means, but there's, I believe, 12 different ways to do a reverse mortgage. Wow. And one is, one of them or two of them is with a line of credit. So depending on the valuation, they can tap into it, not have a payment, and then it evaluates based on that to give you a line of credit in order to help with other expenses too. But you can do reverse for purchase too. So if they sold the house and they didn't have enough to pay cash for the next one, they may want to put 50% down or something like that and get into a reverse mortgage to where they don't have a payment. In Texas, there's, over 65 exemptions here on taxes, and it significantly limits how much you pay in property taxes too. So they can get in and have a very, very reasonable payment and not have to worry about making that mortgage every month.
No, that's interesting. Yeah, good. Thank you for that. Cory, what's our next question?
Any other mortgage products? We just talked about the reverse mortgage, but Brooks, are there any other mortgage products that people should consider right now?
We're still a lot with the mainstream mortgage products. It eliminated a lot in 2008 as far as you say subprime goes. But what's been created over the years is non-QM mortgages, non-qualified mortgages. And it gives you an alternative to qualifying. So we get a lot of self-employed clients that tend to write off most of their income or a lot of it, but they make a lot of money. They just, don't show a lot. So they've created bank statement loans or profit and loss qualifications. So there's still a qualification to the mortgage because you have to prove that they can make the payment on it, but it gives them alternatives to qualify. And for people that haven't been able to get into a home as a self-employed buyer, it gives them an opportunity as well. So we also have one, there is a no income loan. It's very well qualified. So it's not, 2005, just everybody gets a house kind of loan, right. But 20% down with a 740 credit score and 12 months of payments in the bank, you can actually get a loan with no income. All these loans come with a premium per se. The rates are 1% or 2% higher than what the going rate is, but provides that opportunity for people that couldn't necessarily get into a home while still, qualifying so that we don't run into a 2008 kind of situation again.
Right. What is a 30-year fixed rate right now? Roughly. I know it changes every day.
Yeah, conventional, you're in the mid to low sixes today, possibly in the high fives. We see most of them needing to pay a point. Right now, the investors are not paying well on the investment side of it. So we can get some into the fives for sure with paying points. And that's what most people do, because I do believe rates will cycle. They always do. But to get to the payment and the rate that you want right now, there might be some cost to it.
So they can literally just buy down the rate a little bit by paying a little bit more for it.
Yeah, we see both permanent and temporary buy downs as well.
What about adjustable rate mortgages or ARMs? Are those more popular now than they were a few years ago?
They're definitely asked about a lot more because typically ARMs have a much lower interest rate than a fixed rate does. Conforming loan rates, Fannie Mae and Freddie Mac conventional loans, FHA, VA, they've all, they just haven't gotten back into the market for ARMs. So it's very difficult to find a conforming type product with a good ARM rate. We do see the jumbo price point a lot with ARMs because you'll see 0.5% to 1% better interest rate on those. And when you're talking about $1 million loan amount, that's a significant number for those people. So we do a lot more ARMs on jumbo than we do anything else.
Good. Oh, perfect. So as we wrap up today's show, are there any final tips or words of wisdom you have for this current housing market, for the mortgage market?
Yeah, I touched on it a second ago. The temporary buy down is a great product. There's 2-1 buy downs or 1-1 buy downs. It essentially means that you buy your rate down on a 2-1 for 2% the first year, 1% for the second year, and then it goes to the market rate that you locked at years 3 through 30. And so it gives you a temporary reprieve when those payments are going up. Say you're moving up in a house. They do have to be seller funded, so the seller has to pay it for you, but that can be part of your negotiation. So that's a great opportunity for folks that are a little worried about stepping up in that payment, or they see a big raise coming soon. But overall, like I tell every client, you got to be in the market, right? It's the same as the stock market. You can't just sit idly by and watch it. You have to be in the market to get the benefits from it, and to sit by and just watch it go. A lot of clients we've been talking to for 2, 3, 4 years that just never pulled the trigger, and now are looking at a completely different price point than they were 3 years ago. So get in the market, take that opportunity, use down payment assistance, save up your 3 or 5% down and buy a house that you're comfortable with.
That's good. That's good. Thank you, Brooks. And for all of our audience, if you're interested in getting in contact with Brooks, certainly just send me an email or Cory, and we're happy to connect you directly to Brooks. Well, thank you so much, Brooks, for joining us today. Stay cool down there in Dallas, and hopefully you and I can get out on the golf course soon. And Cory, you can hold down the fort.
You got it.
Sounds good. Thanks,
Perfect.
guys. Appreciate you having me on.
Thank
you, Brooks.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.